A day of reckoning. Indian stock market recap for August 5th, 2024. August 5th, 2024 marked a significant day for the Indian stock market. It was a day of reckoning, a day that would be remembered for its volatility and the emotional rollercoaster it put investors through. Investors eagerly watched as domestic indices mirrored the positive sentiment seen in global markets, hoping for a continuation of the upward trend. The day's trading session held immense importance as it provided crucial insights into the market's resilience and the overall economic health of the country. Traders were particularly keen on observing how key sectors such as technology, finance, and consumer goods would perform under the current market conditions. They wanted to see if the bullish momentum, which had been building over the past few weeks, could be sustained or if it would falter. The market's performance on August 5th carried significant implications for investor sentiment, potentially influencing their strategies for the coming months. It also influenced future market direction, setting the tone for the rest of the quarter and possibly the year. A strong close would bolster confidence, encouraging more investments and a positive outlook. Conversely, a weak close could trigger a correction, leading to a more cautious approach from investors. As the day progressed, market participants were glued to their screens, monitoring every development with bated breath. They analyzed every tick, every movement, and every announcement. The stakes were high and the pressure was palpable. Every decision made could have far-reaching consequences, making this day a true test of nerves and strategy. Setting the stage, Nifty and Sensex opened strong. The Indian stock market opened on a positive note, with both the Nifty and Sensex witnessing significant gains. This positive opening was a welcome sight for investors who have been closely monitoring market trends and economic indicators. The Nifty 50 index opened higher, reflecting the optimism among traders and investors. The index's performance is often seen as a barometer of market sentiment and economic health. It closed at 19,700 points, a gain of 1.20% for the day. This marked a significant milestone, reinforcing the positive momentum. The Sensex, India's benchmark index, followed suit, closing at 66,500 points. This strong performance was driven by gains in key sectors. It marked a gain of 1.25%. The Sensex's rise was fueled by robust performances in sectors such as technology, finance, and consumer goods. These strong opening figures set a positive tone for the day. Traders and investors were buoyed by the market's upward trajectory, anticipating further gains. It signaled continued confidence in the Indian economy. Analysts pointed to strong corporate earnings and favorable economic policies as key drivers of this confidence. Investors were particularly encouraged by the performance of heavyweights. These companies, often seen as market leaders, played a crucial role in driving the indices higher. These heavyweights contributed significantly to the indices' upward movement. Their strong performance underscored the resilience and potential of the Indian stock market. Riding the bull. Top gainers propel the market higher. The market witnessed a significant boost today, driven by the stellar performance of several key stocks. Several stocks emerged as top performers on August 5th, 2024, contributing significantly to the market's upward trajectory. Investors were thrilled as they saw their portfolios grow thanks to these top gainers. Tata Steel, driven by strong global demand, surged by 4.50%. The company's robust performance was fueled by increased infrastructure projects and a rise in steel prices globally. Hindalco, another major player in the metals sector, rallied by 3.80%. This surge was attributed to the company's strategic expansions and favorable market conditions. JSW Steel, also benefiting from the positive sentiment in the metals industry, climbed 4.20%. The company's innovative approaches and strong quarterly results played a crucial role in this upward movement. These companies' exceptional performance highlighted the resurgence of the metals sector. The metals industry, which had been facing challenges, is now showing signs of a strong recovery. Their gains not only boosted their individual stock prices, but also instilled confidence among investors. Analysts are optimistic about the future prospects of these companies. They also had a ripple effect, lifting the overall market sentiment. The positive momentum is expected to continue, with more investors likely to enter the market, further driving the growth. Feeling the heat. Underperformers weigh on the indices. While the overall market sentiment remained positive, certain stocks faced selling pressure. Divi's Labs, a prominent pharmaceutical company, witnessed a decline of 2.50%. Cipla, another pharmaceutical giant, slipped by 1.80%, while Dr. Reddy's Laboratories shed 2.20%. These pharmaceutical companies faced headwinds due to concerns over pricing pressures in the US generics market. Their underperformance served as a reminder that even in a bullish market, not all sectors move in tandem. Section 5. Sectoral Spotlight. Metals shine, IT lags, and banks remain resilient. Analyzing the sectoral performance on August 5, 2024, reveals interesting trends. The metal index emerged as the top performer, surging by 3.9% due to strong global demand and rising commodity prices. The IT index, however, lagged behind, declining by 0.8% due to profit booking after a recent rally and concerns over US visa regulations. The banking index remained relatively stable, closing with a marginal gain of 0.25%, reflecting the sector's resilience and positive outlook for credit growth. Section 6. Deciphering the drivers, global cues, economic data, and company earnings take center stage. Several factors contributed to the Indian stock market's performance on August 5, 2024. Positive global cues, particularly from Wall Street's record-breaking performance, fueled the bullish sentiment. The release of encouraging economic data, including a rise in manufacturing activity and strong GST collections, further boosted investor confidence. Robust earnings reports from key companies, particularly in the metals and banking sectors, reinforced the market's positive outlook. Section 7. Charting the course. Technical analysis reveals key support and resistance levels. From a technical analysis perspective, the Nifty 50 index exhibited a strong uptrend. The index broke through a crucial resistance level at 19,600 points, indicating further upside potential. The next resistance level is seen at 19,800 points, while strong support is established at 19,500 points. The Relative Strength Index, or RSI, remained above 70, suggesting that the market is in overbought territory. Section 8. Bullish momentum intact. A look at the broader market trend. The Indian stock market's performance on August 5, 2024, reinforced the ongoing bullish trend. The strong closing figures, coupled with positive global cues and robust economic data, indicate that the market is poised for further growth. Investor sentiment remains optimistic, driven by expectations of continued economic recovery, supportive government policies, and strong corporate earnings. Section 9. Navigating volatility. A note of caution amidst the optimism. While the overall outlook for the Indian stock market remains positive, investors are advised to exercise caution. Global market volatility, driven by geopolitical tensions and rising inflation concerns, could impact domestic markets. Furthermore, the upcoming quarterly earnings season may bring some volatility as companies adjust to changing market dynamics. Section 10. The road ahead. Anticipating continued growth with a watchful eye. Looking ahead, The Indian stock market is expected to maintain its upward trajectory. Factors such as strong corporate earnings, robust economic growth, and positive investor sentiment are likely to drive the market higher. However, investors should remain vigilant and monitor global cues, economic data releases, and corporate earnings reports for potential market-moving events.